Hello, I'm doing a quick video here on the markets going into Monday to start the week. This is the 16th of May and it is Monday for this video. I'm doing this on Sunday evening before the futures start. So anyway, looking back I did a video sometime in the middle of last week where we called the bottom on the Nasdaq, and I believe that was the day before it did the reversal. It did appear that the selling was way overdone, and the sentiment was extremely bearish. Put call ratios were at extremes, so that's where that call came in. Also on Friday, again, it's the same logic with the short covering rally video I did before the open. So hopefully I can keep the projections going in the right direction. I'm going to be wrong sometimes, and keep in mind I'm not a financial advisor. I just do this as a hobby. It's something I enjoy to do. I do trade off what I use here as you know in my accounts. So this is not just something I'm doing for fun for me. Actually, I do this for myself, but I'm just sharing this information, and just keep in mind I'm not a professional, okay, but I just enjoy doing the projections. Okay, looking at the chart. Okay, so the Nasdaq, and I follow the Nasdaq futures, which is the NQ, and it's the June contract. So I use that as my main charting. I follow the Nasdaq, and I spend a lot of time looking at the Nasdaq, the futures. And I'm not looking at, the Dow and the Russell and all this. I just focus on the Nasdaq. Now I am posting a table here of the S&P 500 put call ratios for the next 2 weeks. So I'm going to put that table up later and I'll go over that. But as far as the chart goes, we didn't quite clear the 12,500, which is sort of a resistance we got to get through. I think we will go through that. I'm looking at this impulse wave from Friday, and I say it's about 3/5 completed. I'm expecting it to get up to 12,800. That might even happen in the overnight future session and early morning on Monday before the market even opens. So that would be nice. If it hit 12,800 overnight, I think it's going to pull back in the morning before the open, and there's a good shot that we could end up at 13,000 on the close Monday. Wouldn't that be sweet? That's my projection, going out on a limb, is 13,000 by the close on Monday or the open on Tuesday. More than likely the Monday close or shortly after that. So I see 12,800, something that we're probably going to get, and 13,000 is the upper target, which I think is very possible. Now the impulse, when you break it down on the micro level, it definitely looks like short covering stuff, and I think, like I said, it's about 3/5 completed. That's why I believe we're going to go up. There's also a really high put call ratio on the S&P 500 for Monday of 2.54. This is high, and this is the reason why we're having the short covering rally. Now, I'm also seeing Thursday and Friday as really good days. Friday has a over 2.5 put call ratio, and the Thursday has a whopping over 4.5 put call ratio. So I'm expecting fireworks on Thursday. So it should be a good week. This should be a positive week to break the losing streak of 6 straight down weeks. Isn't that horrible? This should break that trend. Now, I'm not sure how long this is all going to last. This could end up being, like a fast, short covering rally that goes up for a couple weeks and then starts coming back down again. That's very possible. I think we're going to end up, after the short covering rally, I think we're going to end up in choppy waters here. I think we're going to end up going up and down into June, July. I think a lot. And now the good thing is, when it does that chopping around, we're going sideways, right? So that's a good thing. Instead of going down and down, we're going to eventually catch up with these, moving averages and stuff that people look at. Like the 200-day, and the Nasdaq and the S&P 500. I think if we end up going sideways, everyone's looking at now. They're looking at coming down. They're looking at the chart and they're seeing the S&P 500 and the Nasdaq cratering, right? And they're looking at this 200-day moving average and they're saying this is where it's going to go, and they're using a lot of targets around there, but they're not taking into account the time factor. It doesn't have to go all the way down 200-day moving average now. Okay, it can get there later, and it probably will. It's going to eventually hit that 200-day moving average, and I think it's going to end up going sideways to get to that. That's just my thoughts on all that, and why I think people are overstating a lot of their targets to downside. On the S&P 500 and Nasdaq more, even more. So other things I'm looking at is the rates on the 10-year, they are coming down. So this is a good sign, and the markets are liking that. They want to see that come down. Now the kind of interesting thing is, when you look at the interaction between the bonds market and the stocks, usually, when the bonds go down, the yield, that means bonds are going up in value. People are moving into bonds. Okay, money is moving into bonds. The yield goes down when people get into the bonds. Okay, and that money often comes from the stocks. Okay, so if money's moving from the stocks into bonds, that's not a positive, right? But I think in this case it's a little different because people want to see the rates drop down from the 3%. They're seeing this as all like a red flag, right? So they want to see that come down. If they get that down to like 2%, I think the markets are going to really like that, you know. Even though you have that play between the stock market and the bonds, where the money moves between the two. So it's interesting here with the spike in the yields and how the market sees it as a red flag. Okay, so we need to pull back from that, and that's happening. Okay, we're down into like 2.9 something around there now. I don't have that right in front of me. Oil's another factor. Oil needs to start coming down. Now, oil will probably come down, and after, I think it's still kind of overshooting here. It's going up. It probably for this week. Maybe next week we'll start seeing oil start to pull back. And the thing is, you're gonna need a lot of demand destruction going on, and a lot of the problems with getting oil to places. It's not so much that there's a lack of oil. You get a lot of logistics issues going on now, with the sanctions and so on, with the oil. So I think oil, it's getting a lot of demand destruction with high pricing, and this is going to bring the price down on the WTI and Brent. Now, if we can get oil back down under 100, I think the stock market's going to like that too. It's a little too high. It's getting up there where it's a negative, because it's affecting the inflation and all the energy. And energy is tied into a lot of the stock market. Not in a good way. I mean, like, yeah, Exxon and Chevron, they're going to go up. They're loving that. But I'm talking how it affects the overall stock market when you have extreme energy prices. It affects the production costs and so on. Like transportation stocks are severely affected. High fuel cost, aviation industry. It's in a lot of sectors. So, if we can get oil to cool off, that would be a huge positive for the market. So anyway, I just thought I'd give that overview. I want to do a video on gold because I think gold is kind of really messed up. It's way down here. I'm not a gold investor, but it's something's wrong with gold. It should not be at these low prices with 20% inflation. So I'm going to do a video on that. And as far as inflation, like I mentioned, I do think it's around 20%. If you look at shadow stats, I think it's around 18%. I think even that under reports it. Double the CPI, because the CPI is concocted. The real inflation calculations were discarded somewhere around the Clinton era, and they have been underreporting approximately by half. Okay, so this is why, everyone complains about high prices, and you look at the CPI, it's like 8%. It's way higher than that. So go to Shadow Stats if you want to know what the real inflation rate is. And again, I think that's even a little low. So, that also affects the stock market, right? So the stocks, have a little tailwind from inflation itself. And I think this is why, you're looking at these logarithmic charts and so on of the stock market is because the inflation, the dollar has been devaluing for a century. So this is a tailwind for the markets as well. So keep that in mind, that inflation affects the prices of everything, including stocks. So anyway, I hope this was helpful. Just to recap, I'm looking at the rally to continue to get to 12,800 and looking at even a target of 13,000 by sometime Monday evening on the close or shortly thereafter. Okay, I hope this was interesting to someone, and I'll talk to you later.